The market never stops moving, and opportunities always hide behind the numbers. Welcome to Elite Talks, the exclusive monthly podcast from Securities. Here, we analyze trends, provide insights, and trading strategies from our experts' perspectives and experience, helping you optimize your portfolio under any market condition. And this is the third episode of Elite Talks. I'm Nhạ Mai, and I'm delighted to accompany you in this episode as we review the hottest developments in global and Vietnamese financial markets. Joining me today is Ms. Nga, Head of Macro Research and Strategy at Securities. Hello, Ms. Nga.
Hello, Mai. Hello, audience. It's a pleasure to join today's discussion.
The international picture begins. After the handshake between the U.S. president and the Chinese president, the market atmosphere has somewhat cooled down. So, are the commitments after the meeting enough to reduce the risk of escalation? And what short-term impacts should the market pay attention to?
Yes, both sides have made a series of cooling moves. The U.S. reduced some fentanyl-related tariffs, paused the expansion of the blacklist for a year, China pledged to tighten fentanyl, delay rare earth controls, partially lift retaliatory tariffs, and increase purchases of U.S. agricultural products. In the short term, these steps reduce uncertainty, open up dialogue, and help maintain the rhythm of global trade. However, this is more of a strategic time buying than a fundamental solution. So investors should still be cautious about the risk of re-escalation. On the monetary front, the Fed cut 25 bips and also announced a QT pause on December 1. Why are U.S. bonds still not cooling down? What do you think about this issue? As everyone knows, the Fed continued to cut interest rates by another 25 bips in the October meeting, bringing the interest rate level down to around 3.75 to 4.00%, in line with our previous forecast. However, the Fed chairman's post-meeting messages were quite cautious, implying that we should not expect another cut in December. In addition, in this meeting, the Fed also announced that it would temporarily suspend its quantitative tightening program. This also partly shows the Fed's concerns about liquidity reserves in the banking system approaching the scarcity threshold. The temporary suspension of QT is considered a precautionary step to avoid the risk of liquidity stress that could repeat as in 2019. However, in the bond market, U.S. government bond yields still increased in many maturities. Investors believe that the Fed's cautious stance means that risks remained higher than expected. Therefore, the flight to quality trend, the flow of money to safe assets, may last longer, reflecting more deeply the cautious sentiment of the market. China also announced a new 5-year orientation with a focus on technology and new quality productive forces. What key points affect Vietnam's supply chain and opportunities? The focus of this plan is to increase technological autonomy and invest heavily in strategic areas such as artificial intelligence, semiconductors, digital infrastructure, and green technology. We can clearly see that China is restructuring its industry towards a smarter, greener, and higher value-added direction. And of course, this trend also opens up opportunities for Vietnam. Foreign capital and manufacturers can continue to diversify the supply chain, shifting part of it to Vietnam, especially in electronics, technology equipment, and supporting industries. It is important that Vietnam needs to improve the quality of its labor force, develop technological infrastructure, and improve business support policies to catch up with this wave of shift. Otherwise, we will only stop at the role of processing and find it difficult to raise the value level to a higher level in the chain. Back in Vietnam, October figures show that manufacturing continues to recover, trade activities are positive, FDI remains a bright spot. Can you briefly sketch the overall picture? Yes, both the IIP and PMI indices show that manufacturing is on the rise. Output increased fairly evenly across industries, with the electronics industry standing out with exports exceeding expectations. Total trade turnover reached more than 81 billion USD, bringing the cumulative import-export turnover of goods to 762.44 billion USD, up 17.4% over the same period in 2024, the highest growth rate in the past 3 years. Regarding FDI, it can be said that FDI is maintaining a very solid foundation. Both newly registered capital and additional adjustments recorded positive increases, while disbursement exceeding 21 billion USD shows that projects have really entered the implementation stage, not just stopping at the commitment level. In addition, projects are also diversified in industries, from industrial production to energy, industrial park infrastructure. The North continues to emerge as a priority destination for investors, especially thanks to its infrastructure advantages and connectivity location. Besides the bright spots you just mentioned, what are the factors we need to pay special attention to regarding the economy in the coming time? First, domestic consumption is slowing down. Real retail sales have only increased by about 7% since the beginning of the year, although international arrivals in October reached a record 1.73 million. This shows that domestic purchasing power is recovering slowly, partly affected by natural disasters and recent weather fluctuations. Second, public investment disbursement has only reached less than 60% of the plan, despite positive changes in some localities. Progress is still slow, causing the stimulus effect to not spread strongly and opportunity costs to increase. Expectations for the completion of the annual disbursement plan to fall to about 70% from the target of 90%. Third, currency and exchange rate developments are still factors that need to be closely monitored. V&D interest rates are anchored at a high level, causing swap interest rates to increase, but exchange rate pressure is still very large. Currently, Vietnam does not have a strong enough inflow from dispersed FDI, remittances, or indirect investment to balance domestic foreign currency demand. As a result, the USD to VND exchange rate is still under upward pressure, currently approaching the 26,300 to 26,400 range, although high domestic interest rates have somewhat helped limit speculation. On the sectoral front, after some Vs has had several increased sessions, that rally has died down. What do you see as the main reason for the slowdown? October can be seen as a period when the market takes a break to rebalance expectations. Positive expectations such as market upgrades and better-than-expected Q3 business results have largely been reflected in prices before. Meanwhile, the FTSE upgrade roadmap must wait for a midterm review in March 2026, so the market temporarily lacks new catalysts. Meanwhile, macroeconomic factors bring unfavorable information. Interbank interest rates increase again, the USD strengthens, making investors worry about exchange rate risks. In addition, side information related to real estate price control causes concerns about this group of stocks. As a result, the base cash flow declines while derivative transactions increase. Cash flow shifts from large cap groups, banks, real estate, resources, to low-price stocks or stocks less affected by interest rates, like technology, chemicals, oil and gas, insurance. In addition, foreign investors continued to sell net, ETF funds recorded capital withdrawal, while domestic individual investors remained the main net buyers, helping the market maintain a relatively balanced state. However, the outstanding margin debt has exceeded 368 trillion VND, with the margin equity ratio over 150% at many securities companies, creating a potential risk of liquidation, especially if the index continues to adjust deeply. In the context of the current pressure vortex, high interbank interest rates, tight exchange rates, and net foreign sales, what allocation strategy does PHS propose? We believe that in the context of the market having liquidity pressure and the interest rate exchange rate variable has not cooled down, an active defensive strategy will be prioritized in this period. Specifically, investors should maintain a moderate stock proportion, disperse part of the investment in clear accumulation areas, limit the use of financial leverage, and closely monitor key variables, including interbank interest rates, USD to VND exchange rates, along with foreign capital flows in ETFs to adjust the market entry and exit rhythm more flexibly. Regarding the stock portfolio, PHS continues to focus on businesses with good fundamentals, attractive valuations, and clear stories such as HPG, POW, or recently the oil and gas group has also recorded quite good performance, such as PVS. We also expect the retail group to grow steadily, in which we choose MWG. Overall, we see this as a selective accumulation phase, prioritizing risk management and capital preservation. But there are still good opportunities in businesses with their own stories, real cash flows, and clear profit prospects. Entering November, global tensions have somewhat eased. In that picture, opportunities always come with risks, but Vietnam is still moving slowly but surely, taking advantage of the time to maintain the breakthrough pace. Thank you, Ms. Na, for your profound sharing with our listeners.
Thanks, Mai, and thanks for watching.
And thank you for accompanying Elite Talks. If you find the content useful, don't forget to subscribe to receive notifications of new episodes every month from Fu Hung Securities. See you in the next episode.